In the recent past, multiple investors have spoken to me about SME investing. There are some parallels to the startup investments there. The companies are obviously much smaller. There is a lot less coverage of these stocks by the typical investment analysts. While they do not enjoy the same spotlight as a Nifty 50, some of them break out and deliver superlative returns. Sovrenn is working in this space, and today we speak with Aditya, co-founder and CEO of Sovrenn.
Hey Aditya, great to have you on this podcast. I know we've been trying to do this for a while. I'm glad we finally got together and this session is on. Maybe you can start with a brief introduction about yourself and about Sovrenn.
Sure, Ram. Nice being on the podcast, and thank you so much for having me. About myself, so I'm the CEO at Sovrenn. Before starting Sovrenn, I was a senior VP at Standard Living and a VP at Lenskart. Before that, I was a senior project leader with Boston Consulting Group, had almost 9-10 years of experience. And then I, along with my co-founder Akriti, we started Sovrenn. About Sovrenn is an information platform. It's sort of a TNBC for small companies in India. So you would see that a lot of media coverage is given to large companies, right? But there are like lots of 5,000 small companies in India. Because of the large number, appropriate media coverage is typically not there in that space. And that is why we started Sovrenn, to make the small cap and the micro cap space more efficient and to make information in that space easily available. So that's sort of the purpose of Sovrenn.
Very interesting stuff. And how did you stumble upon this business model? How did you find your co-founder? What brought you here? How did you reach here?
Sure. So before starting Sovrenn, right, I would actually always do my research on small caps and micro caps. And small cap and micro cap is a space where if you do good research, right, you can make a lot of money. In fact, when I was at both these companies, right, Standard Living and Lenskart, I would always make a lot of money through my investing as well. In fact, while I was leaving, at that point of time, my salary was much lower than the money I used to make from my investing. So I realized that, okay, this is a passion, this is something which I really understand as well. And this is something that I really like as well, right? So getting data about small caps and micro caps, researching that data, figuring out the right data, that is something which I was doing before also. And it was my passion as well. And then I thought I might as well do this full-time also. And that's when we started Sovrenn. Earlier, when I was in Lenskart or Stanza, I would perhaps spend maybe 2-3 hours in the night every day, and then research companies. But now me and my team, everyone does it full time, right? So that's how we started Sovrenn. Regarding my co-founder, she was my batchmate at IIM Calcutta, and I know her for a very long time, 10 years, I guess. She worked in Credit Suisse and Deutsche Bank, so she has a lot of good equity research experience, and that's how we started this company, Sovrenn.
Very interesting. Especially since overall markets have been good, I keep bumping into a lot of people who say that, I'm making decent amount of money on the sidelines by investing in mutual funds or stocks. And some of them also talk about, I'm wondering if I should jump into this full time. I'm really glad to see that you actually converted your, passion or post regular job activity into your full-time business. That's awesome. So let me understand a little bit about your approach, your process, or investment thesis, whatever you want to call it. Now, when you identify a stock, this is worth investing. What goes behind it? How do you go about it? Would love to know more.
Sure. So what I do is very similar to venture capital investing. I invest only in super small companies, preferably less than 500 crore of market cap. The logic behind investing in small market cap companies is that small eventually becomes big, right? Every big company, every large company, Reliance, Titan, ITC, they all started as microcaps, right? And eventually went on to become the large caps of today. So every large cap started as a microcap or started as a very small company. And therefore, the biggest alpha is if you actually identify microcaps while they're small and identify companies which have the potential to become the next Titan or the next Reliance or the next ITC, right? And even if you look at Titan, right, which was Titan was a microcap when Rakesh Shununwala invested in that company. It was, I guess, a 300-400 crore company when he first started investing in it, and today it's a 3 lakh crore company. So it's 1000x for him from his first buying, right? So therefore, there's a very big alpha in microcaps, and that's where I operate. Now, what goes behind the research in a microcap, right? The first, I have a 5-point framework which I use for my own research. The first thing is, the first and the most important thing is profit uptrend. Okay, so the job of a company is to constantly increase profits. And profits, if you talk about a good businessman, right? A good businessman works hard, works every year, and tries to generate a higher profit than the previous year, right? That's how it works. So let's say you generated maybe, let's say, 30 lakh profit in the first year, then 3 crore profit in the second year, 5 crore in the third year, 10 crore in the fourth year. It looks like that you're a good businessman, right? Because you're able to constantly increase your profits. If profits become stable, or if profits start declining, that's a problem, right? So I always invest in companies which have a strong profit uptrend in it, where the profits are constantly rising. Year one, profit is X. Year two, profit becomes X plus something. Year three, profit becomes X plus something more. So profit uptrend is the first most important characteristic. And I firmly believe that the simplest line investing is that profit बढ़ेगा तो price बढ़ेगा. अगर किसी company का profit बढ़ रहा है, right, then the price will definitely increase in eventually. So therefore, we have to find companies where profits are increasing, which signifies a good businessman. And if profits are increasing in the past, there's a good likelihood that the profits may increase in the future as well. So that's the first criteria called profit uptrend. The second criteria is valuation. Now, whenever we buy any asset, right, the asset should be properly priced. If you buy a flat at, let's say, 2x the value of the flat, that's not a good investment, right? Because you actually made a bad decision by buying the same thing at 2x the actual price, right? So you need to buy every asset at a good price, at a fair price. Similarly, for stocks also, you need to buy every stock at a fair price. In case of stocks, the way to decide whether the price is fair or not is a ratio called price to earnings ratio. Typically in India, majority good companies will get at least 30 price to earnings ratio or more than that. However, when the companies are young, right, they may be given a very low multiple because market is not fully sure about its growth, right? And that's the source of alpha. So I prefer buying companies which have a price to earnings ratio of less than 30, preferably less than 20. So my first criteria should be met, that the company should have a strong profit uptrend. And second criteria should be that the price to earnings ratio or the P multiple of the company should be less than 30 and preferably less than 20 as well. Now that's the second criteria, that I have to buy at a good valuation. I will never buy a company at a bad valuation. I typically don't buy above 60 P ratios. 60 is like the max, but I prefer less than 30 or even less than 20. That's the second criteria. Third is information. And that is the most important point behind microcap investing. Microcaps, or for that matter, any company, right? They share a lot of information with stock exchange. Now, let's say a company has received a very large order. If a company has a very strong order book, or the company has received a very large order, the future of the company will be bright because of the order, right? If the company executes that large order, the profits will rise in the future, right? So large order, if a company gets, that signifies a good future of the company, right? So that's a piece of information which affects the company's future. And I always have some information about the future of the companies in which I invest, either in terms of a large order, or let's say company is doing capacity expansion, right? That data is also very helpful, that the company is doubling capacity or 10xing capacity, right? So capacity expansion, large order, joint venture, acquisition, or fundraising. Fundraising is also a very important piece of information. If a company raises funds, then the future is likely to be bright because the company has cash in the bank, and the company can utilize the cash in the bank to actually grow the business, right? So fundraising, large order, your JV acquisition, your capacity expansion, right? All this data is very helpful and actually helps you estimate the future of a company. Of course, no one has seen the future, so you can't predict it with guarantee, but at least the probability of success becomes higher in case you have future information about the company, right? So that's the third criteria called future information. The fourth criteria is HNI buying. So I always check what other HNIs or high net worth individuals or funds are actually doing in the market, right? So there are so many smart people in India who are constantly researching stocks. And typically, no one is you will not be the first one to actually stumble upon a stock, right? Typically the first person to actually stumble upon a stock or to research a stock very well is someone who is close to the promoter or someone who's actually tracking the company very well, right? And they will show that uh, they will show that interest in that company by buying that company. And any deal, if any investor buys more than 0.5% of a company, they have to declare that to the exchange. And exchange has to provide the data to all investors that, okay, this investor purchased more than 0.5% of this company. Now, if in my company, some HNI is also purchasing more than 0.5%, that gives me more confidence that, okay, that person also has done his research. Maybe they're close to the promoter as well. Maybe they have done a promoter meeting also. And therefore, I am actually using their connection and their knowledge and their information as well, right? Just by virtue of them buying is indicative of the fact that they also like the company, right? So that's the fourth criteria, which is HNI buying. And lastly, I always buy companies of futuristic sectors. So I like sectors which are growing at very, very fast CAGRs. For example, clean energy, for example, electric vehicles, defense, consumption, fintechs. So all these sectors have a very, very high CAGR, right? So I prefer companies which are in these early stage sectors where the CAGR will be very high in the future. The sectoral CAGR itself will be very high in the future, right? So let's say the sector itself is growing at 40% CAGR and you spot a market leader of that sector. So the company might actually be going at 70% CAGR, right? Because the sector itself is expanding at 40% CAGR. So therefore, it's a 5-point framework: profit uptrend, good valuation, future information, HNI buying, great sector. Now, all five will typically not be met. It is rare that all five are met in a company. They can be, but typically if four criteria out of five are met, I can actually take an entry in that company. The first two criteria are non-negotiable. I will not compromise on a profit uptrend, and I will also not compromise on a good valuation. They have to be there for sure. Out of the remaining three, two should be there. So 4 and 5 is a good one. And then of course you apply your own knowledge and you research on the promoter also, what is the promoter background and all. And apart from these 5 factors, some more research and then you're good to go. So 4 and 5 criteria, and then I can actually make an investment.
Awesome, awesome. I didn't want to interrupt you, but when you spoke about Rakesh Jhunjhunwala, that
Right.
it kind of completely resonated with me because I remember long back in an interview, someone asked me, someone asked him, do you like to invest in large caps or small caps? And his answer was, typical stylish Jhunjhunwala. He said, I like to invest in small or medium caps, which have the potential to become large caps. And, that's pretty much what you're trying to do. It's saying that, look, this is a very good small stage company, but I see the potential for it to become, phenomenal. Awesome. So, you've been doing this research and you've been giving advice to people for, the kind of companies which you spoke about. Now, let's assume that someone invested in every recommendation of yours, whatever is that amount, but every time you came in with a recommendation, the person put in a certain amount of money. What kind of a XIRR would that portfolio look like today?
So we don't recommend anything actually. So what Shark Tank does, right? Shark Tank right now is a discovery platform. Sharks discover startups on Shark Tank, right? Similarly, Sovrenn is a discovery platform. You discover stocks, you want to buy it or not, that is completely your call. So it's not that we are saying that buy this stock. We never say buy this stock. We are presenting good work that, okay, this stock got a large order. You want to buy it, go ahead. You don't want to buy it, go ahead. Completely your call. It's just a discovery platform. We don't recommend anything. Now, of course, ultimately the goal is to make good returns, right? So if last year I can tell you about my own returns, I made almost 150% CAGR last year. So my 100 rupees became 250 rupees. So that's the CAGR I had. A lot of people who are into microcap investing and who are good investors, they will typically beat index comprehensively. Last year index itself gave 80% return. So returns of 150% are also not uncommon last year, especially, right? If you look at my long-term CAGR, last 5 years I've been compounding at 70% per annum. So of course my capital base is not more than hundreds of crores. So therefore my capital base was smaller. It was in single digit crores when I started, but then it started compounding fairly well. So I guess my own CAGR is 70%. That is what I can say. Every investor is different. People who utilize information properly, they may be making much higher CAGRs also. If you don't use the information well, if you are not doing good investing, of course, you can make losses also. It's completely dependent on investor. Sovrenn does not give any advice. Sovrenn is a pure information platform. We share information which we think is good.
Very interesting. And why are you not doing like a typical, research desk that, this is a buy recommendation, this is a sell recommendation, this is a hold recommendation? Is it because of compliance or, some other reason?
No, we can, but unfortunately, recommendations cannot work in the stock market. So I'll tell you, let's say I give a buy recommendation. Okay, right? Now, you don't have any conviction. You are just relying on my conviction. The moment the stock starts going down, you will actually sell it. So that is why recommendations can never work in the stock market. No one became rich by actually adhering to someone else's buy or sell call. If you don't have conviction, you will sell the stock when the stock price starts going down, right? Unless you have conviction, you can't make it big in the market. We have all the certifications in place. We can open a research desk whenever you want, but we actually don't want to do it because it is not a good business model. It is not a good model for people. People will not make money because they will sell it at the first sign of scare, right? So people should learn investing. It is not hard. It is fairly simple, actually. If you have the conviction, you will actually remain invested come what may, right? So people need to have their own conviction, and that is what people need to develop. No recommendations can actually work in the market. That is why you will realize that there's no recommendation company which is big, right? Because it just cannot work. It's not a model which can actually work in the stock market.
I find it quite a strange kind of a viewpoint. I mean, to each his own. I personally feel, most of the people coming to your platform are taking the research and considering it to be kind of by recommendations. And I find it difficult to accept that, the whole model cannot work. But I do agree that there aren't too many large companies as a standalone, kind of a research desk or a recommendation engine, so to say. So let's move on. Fair enough. Sorry, go on.
Even in terms of the companies, right, that we cover, we actually cover the negative parts also. So if a company we cover has received a large order, we'll also tell you that this company has these bad points also. So it's a pure, fully neutral data platform. If you think that the company is a buy call, then you will actually be in a lot of trouble. And people are smart enough; they realize that now they have to utilize the data. It's a pure data platform. You can't. If you basically invest on blindly, right, you will lose a lot of money. In fact, I would say if someone wants only tips, they should not be investing in the stock market. They should actually just give their money to a PMS or invest in a mutual fund. Tips cannot work. So tips can never work in the stock market. Either PMS can work or your own research can work.
Very interesting. Let me pick up, one question I wanted to actually ask you later. What kind of people should, take up Sovrenn subscription, or more importantly, what kind of people should not come to Sovrenn subscription?
See, in case you don't have time for research, so typically I would 30 minutes a day is needed, 20 minutes a day. If you can't spend that time, you should not be taking Sovrenn, right? Because you will have to form your 30 minutes a day or 20 minutes a day has to be spent. At least you have to read a newspaper, and then even on weekends, some more research, maybe 1 hour per weekend also. So maybe 1 to 2 hours on weekend also. So you'll have to spend some time. I would say maybe 2-3 hours a week. That's just time which you will need to actually research, study, and form point of view on different things and different data that Sovrenn is providing. In case you don't have that time, you should not take Sovrenn. Second thing, in case you are emotionally volatile, right? You should not. In fact, if you can't control your emotions, then you should not even invest. You should actually invest through a PMS or a mutual fund through the SIP route, because stocks have volatility, right? And some people may get scared. Some people, for example, I know people even in my own family, जब स्टॉक नीचे जाते हैं बहुत डर जाते हैं कि यार तो स्टॉक नीचे जा रहा है, एंड देन वो तब बेचते हैं जब सबसे वर्स्ट टाइम होता है स्टॉक को बेचने के लिए, क्योंकि स्टॉक नीचे गया होगा और वो डर जाएंगे और वो बेच देंगे. तो अगर आप डरते हो, इफ यू आर अफ्रेड, एंड देयर आर पीपल हु आर नेचुरली अफ्रेड, राइट, देयर आर पीपल who will not be able to control their fear emotion or their greed emotion, right? If the emotional control is slightly not there, I think then one should not be investing directly in stocks, because a lot of emotional strength gets tested. So these two things, I think intellectually, no, I don't think stock market needs a lot of basic intelligence is of course needed, basic maths is needed. So intellect is typical. I don't think IQ is a big issue. EQ is a far bigger issue in stock market than IQ.
Right, right. And I personally also know a lot of people who, when discussing, theoretically, they will agree that no, I have a very long-term view and I can, stomach short-term blips. But 10%, 15% थोड़ा सा down हुआ, नहीं यार ये मेरे को, I think this was a wrong bet and I'm just exiting and stuff like that. So yeah,
Exactly.
and I think small
See,
caps, micro caps में ये volatility ज़्यादा ही है. So unless and until you can stomach that, there's no point.
50% जा सकता है. See, stocks can even correct by 50%. If you
Right.
don't have the courage to digest that fall, right, you will not be. In fact, you will sell when the stock is 50% down, which is the worst time to sell. That's actually the best time to buy when the stock is 50% down, right? A good stock, if it happens to a good stock. So
Right.
it's more courage and stomach than brain. Basic intellect is needed, not rocket science. In fact, if you look at even the stellar person, so if I tell you about Isaac Newton, right? Isaac Newton was a great scientist, but actually he made big losses in the stock market because he was not able to emotionally bear the volatility of the stock market, right? So that's the tricky part of stock market. It tests your emotions, and you have to be very sort of stone cold when stocks go down. You have to be able to maintain your calm. Otherwise, it's very tough, right? If your portfolio swings down by 20%, and for large portfolios, that's in crores. So if you are not able to bear it, you will struggle big time. So I think emotional control very, very, very important in the stock market.
Got it. So, what would be your own kind of super bullish names कि आज के तारीख में you are, like really positive and optimistic कि ये stocks जाएंगे ऊपर types?
See, again, I think I strongly feel that you should have 20 stocks in the portfolio.
Right.
Okay. One or two stocks will not do you any good. Ultimately, if you're focusing your life on one or two stocks doesn't help. You should have a well-diversified 20 stock portfolio. I believe in equal allocations. So at the time of my allocation, all my 20 stocks, they get exactly equal allocation. So let's say you want to invest, let's say 10 lakh rupees, right? So I would say that invest 50,000 in 20 stocks, exactly 50,000 in 20 stocks, and then let the stock market do the magic and your research do the magic, right? So I never say that, okay, go for this stock, that stock, or whatever. I don't think that works actually. For me, it's a portfolio which has equal allocations. Of course, in terms of sectors, I'm very bullish on defense sector. I'm very bullish on EV companies. I'm very bullish on clean energy companies. So I'm very bullish on tech platforms. So these are the sectors which I really love. However, I would not take any stock names.
Okay. And if there was a theme, either a company or a sector where, given a choice, you would like to short, are there any such names?
See, I don't believe in, again, I don't believe in shorting. Again, if you look at it, let's say there's a 100 rupee stock, right? Even if you short it, the money that you will make is, let's say the stock goes to zero, it's still $100, right? Or whatever is multiplied units you're shorted, right? But your upsides are actually infinite. So your downsides, shorting again will not make a lot of money unless you are considerably levered. And I don't believe in shorting. I'm a purely, I like a long only investor. I like buying good companies and sitting with them till the time they do something bad or they post a very, very horrible result. I just buy them and sit tight. I think that is my style of investing. I don't short. I don't do anything else. Pure buy and hold.
Understood. And, I'm sure in your investment journey, there would have been one or two mistakes, where you felt very bullish and then eventually the stock didn't move or it crashed or whatever. Can you share any one such example and, what you learned from that process in terms of, subsequent investments?
Right. So I see Indian stock market is a fairly complex place, and out of 20, if you invest in 20 stocks, one stock will be a problematic stock every year, right? So I have one problematic stock every year. In fact, one will be a really, really bad stock for me. Maybe 4, 5, 6 average stocks, where I will sort of make losses, and 14 good stocks where I will make deep profits. So typically, if you have 20 stocks, 14 will do well for you or for me, because my trade is sort of 70, 75%. 5, 6 average, and by average I mean they will go down, but not a lot. One will be a pathetic stock. Now I'll tell you what I learned from my old pathetic stocks, right? So there's a stock called Sharika Enterprise. I invested in that. I invested 20 lakh rupees. maybe 2 years back. Okay. Why I invested? Because the stock was getting a lot of large orders. The order book of the company was fantastic. Very, very huge order book. Maybe 30 crore revenue annual and 150 crore order book. So I was like, this company has a stellar order book and maybe I should be buying this company, right? Because the future could be good. Now, the company had a very horrible track record. It had never made profits in the last 5, 6 years. It was always making losses or maybe minor profits. I don't remember the exact numbers, but the track record was actually pretty pathetic. I invested in that company and then made a 60% loss. I put in 20L and took out only 8 lakh, 12 lakh gone. And the learning was never buy a stock which has a very, very bad track record, because a bad track record typically means a bad promoter as well, right? Maybe the promoter itself is not, are not interested in running the company. So the learning was that always buy profit uptrend companies, no matter what. Don't compromise on the track record of the promoter. Profit uptrend is a non-negotiable, which I said in the earlier part of the podcast as well. So that's one example, Sharika Enterprise, where I lost 60% of my capital, purely investing on order book, but I shouldn't have done that. One more example I will give is a company called Thai Industry. Thai Industry, again, I invested because the company had posted a very strong result. And I thought that the results will continue in the future also. But again, it was a one-off result. And if I look at the track record of that company also, it was very erratic. So again, my learning was never buy erratic track record companies, buy companies which have profit uptrends. In case of Thai Industries, the promoter holding was also very low, only 25%. So another learning from the Thai Industry incident was that don't buy companies which where the promoter holding is very, very low. I don't buy companies with very low promoter holdings or which have a very bad track record. At a VC fund, right? They can't exit because there's no market for those securities, right? In our case, I can exit anytime I want. So what I do is, if my company posts a very bad result, next quarter I'm out. Okay. So the now what can happen in like 4 months, right? The stock price will not move dramatically. If I see a very bad result, I'm always out. So the maximum loss typically, Sharika was an extreme case, but I don't see losses of more than 40%. Like that's like the sort of the max loss which I bear, barring some free cases like Sharika and maybe one more example where I lost another 70%. I don't see losses of more than 40%. I'm out. 40%, if the result is bad, I'm out. And I take that, I book that loss, right? And I will rotate that capital. And now the good part is if the profit uptrend is there, if information is there, the probability is on my side, right? Because I've already checked a lot of those boxes. So now my hit rate will also be fairly high, right? So I think that's the beauty of microcap investing, that even your bad choices, right? You don't have a lot of downside on your bad choices, because you can always like sell those bad choices once the bad results are declared. VC funds, they can't actually sell out. Right. I think that's the trickiness you have with illiquid securities, right? It's a far difficult job being a VC because of that illiquid nature of the securities that they're dealing in, right?
Sure. Okay.
Yeah.
We spoke about customers who should ideally not come to Sovrenn. I'm sure, despite whatever process you have, you would have had some bad experience with customers who had unrealistic expectations, or they started screaming at you for something. Do you want to share some funny stories out there?
No, so not a lot, right? See, ultimately, if you look at the platform, you will realize in one go it's just data, right? So we typically don't get many customers where expectation mismatches are there, but there are some, right? Though I think we have refunded money to maybe 9 customers in the last 1 year. Okay, all 9 wanted tips. They wanted buy sell recommendations. And when they realized that we are not getting that, we don't know what to do with the data. And we were like, that's completely fine. Maybe you had a misunderstanding, and we refunded the money, right? So I think if you want tips, I think there's no funny story as such. And there are people who want tips, right? But I strongly feel tips can't work in the stock market. No one eventually became rich by tips, right? So I think that's sort of what happened in those 9 or 10 cases where the expectation mismatch was that they wanted buy sell calls, and we don't give buy sell calls.
It's interesting, I was in a meeting with a very good friend of mine who also happens to be a good angel investor. And another friend of mine just casually asked him, so how do you invest in listed stocks? And he said, I basically invest through tips. And, the two of us started laughing. And my other friend was saying that, you're the only one who has explicitly ever said to me that I invest based on tips. Those who invest on tips usually don't admit that they invest on tips, but he was the only guy who said that. But nice, good to hear your stories. There's a friend of mine, another friend of mine, who was talking about his finance professor once, and he said that if you see Nifty trading below, let's say, a 12 PE, you should sell your car, you should sell your house, you should sell anything and everything you hold and just buy equity, because that's a kind of a
Right.
screaming buy, so to say. Of course, these days, valuations are far more crazy, and I was quite surprised that even SEBI is saying that, our valuations are justified because, India is the future, blah, 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 whatever it is. From your perspective, especially when it comes to micro caps, small caps, what one or two metrics declares a screaming buy for you?
See, I think see, microcap, you have to be very stock specific. Nifty, when you say Nifty at 12p, right? And it's a screaming buy, there's a very strong logic to that statement. India will not be degrowing anytime soon, right? India is a developing economy and we will witness growth. And in fact, we are witnessing growth at 7% CAGR, right? Real growth. So if you find Nifty at 12, it's very cheap because Nifty is almost certain to grow. There's a 99% probability that Nifty is certain to grow, right? But in case of microcap, there is not a 99% probability that the microcap is expected to grow, right? The probabilities are far lower. So I would not say a single metric. I think, again, all 5-point criteria. For me, a screaming buy is, if I'll give you an example of a screaming buy. The company has a strong 5-year profit uptrend. Companies consecutively increasing profits of 5 years. Second, the P is less than 20, maybe the P is 15. Third, I have the information about the capacity expansion plan of a company, that the company is trying to increase, let's say, the number of outlets by 30% or 40% in next 1 year. Fourth, I also know that an HNI is invested in the company at a price of, let's say 140 when the current price is 100. So actually, I'm buying lower than the HNI also. And lastly, it's in a consumption sector. So if all five are met, then I would actually consider it a screaming buy. Otherwise, not. I don't think there's a screaming buy in the microcap space. All 4 or 5 criteria have to be met. If let's say just one criteria is met, you may be actually doing a bad investment, right? So all 4 or 5 criteria should be met. If all 5 are met, that is what I call a screaming buy.
Got it. Okay. Before we wrap up, any last words for investors who have especially not considered small caps or micro caps? What would be your advice to them?
See, I think people don't do small cap, micro cap investing because they have never been taught that, right? Sovrenn, if you visit Sovrenn's website, our knowledge is completely free. So you can learn investing free of charge at Sovrenn. So I think people don't invest in small caps and micro caps because they haven't been taught investing. Now, assuming you have been taught investing, then at least you have the theoretical knowledge, right? If you watch the Sovrenn videos, you have the theoretical knowledge to invest. Now, you will never know if you are good with microcap investing or not unless you try it, right? So I always say that you should maybe try microcap investing, maybe just with 10,000 rupees, right? Buy 10,000 rupees, invest in microcaps, 20 stocks, and maybe only 500 rupees each, right? Or maybe 20,000 rupees, 20 stocks, 1,000 rupees each. Now, even if you lose money, let's say you are a really, really bad investor and you have you are sort of getting a lot of fear when stock market is going down. So what will happen is that your 20,000 will become 16,000, and you will eventually realize that, okay, I should be going through a mutual fund route, right? Because I'm not able to manage my emotions properly. But in case you start making money, right, then there's no going back, because then you will realize that, okay, this is fairly easy and even I can do it, right? So everyone should try it out. If they succeed, try it out very small, with a very small amount, right? So that there's no cost of failure. Once there is no cost of failure, I think if you still are able to succeed because of some behavioral thing, right, and it will be mostly because of a behavioral thing, that not being able to manage your emotion, right, that which I talked about, then of course quit it, don't do it. Otherwise, if you start making money, if you start generating good CAGRs, then you can always scale it up, right? That's how I began. I also started as a large cap investor like everyone else does, but eventually I realized that I'm good with micro cap investing, so I completely do micro cap investing now. So I think you should try it out. Everyone should try it out. If it's not your cup of tea, don't do it. Do the classical route. SIPs and mutual funds and PMSs. In case you can do it, well and good, you should try it out.
Great. Yeah. Thank you so much. I hope after listening to this podcast, more people at least, do some more research on the microcap space, if not actually start dabbling in it. Thank you so much for your time. Really appreciate it.
Thank you so much. Thank you so much, Ram. Thanks for having me.
That brings us to the end of this episode of For $1 Billion More. Hope you enjoyed learning about microcap investing today. Please make sure to subscribe to this channel to stay updated about the next podcast session. See you soon.